Welcome to camelbacktrading.org. The stock market is heading into a long holiday weekend, which means today's price action wraps up our official trading week. Since the equities market is closed tomorrow and futures close early at 1 p.m. Eastern, any holiday trading will simply be treated as part of the overnight global session. If anything structurally significant shifts over the next few days, we will update the plan before Monday's open, but for now, the stage is set for next week. If you want the complete written report, the full strategic plan for next session, and all the specific key levels we are tracking, make sure to head over to our Substack publication right now to get the full plan. Coming out of the global session, we saw a solid effort to erase most of Wednesday's late-day downward move. However, once the regular trading hours began, we got a clear look at a two-speed market, with a stark contrast between the S&P and Nasdaq futures. The S&P opened directly inside Wednesday's value, which was an immediate signal to expect a choppy, range-bound session. It spent the entire day rotating back and forth completely within the initial boundary, failing to break out in either direction. This heavy, directionless rotation carved out a massive 12-wide point of control, meaning the market found a high level of agreement right in the middle of the range. Because it didn't choose a direction, the S&P remains inside a tight daily balance, bounded strictly by Wednesday's high and low. The Nasdaq told a completely different story. It showed relative strength from the opening bell, gapping higher and successfully breaking above its initial balance high. Buyers pushed the auction upward into the afternoon, culminating in a late M-period price probe and a 7-wide point of control. This strength allowed the Nasdaq to put its daily time frame into a much broader, cleaner balance that stretches all the way up to Monday's all-time highs. Looking at the market-generated information scores, the bulls clearly dominated the day in the tech sector, while the S&P gave them a more modest, neutral edge. Taking a step back to the higher time frames, Monday's contract rollover has effectively reset the weekly charts for both indices into a clean, 2-week balance, while the broader monthly timeframes remain firmly up. Looking ahead to next week, the trading plan depends entirely on which index you are executing. For the S&P, value ended unchanged, meaning neither the buyers nor the sellers possess a structural edge. For the bulls to gain traction, they must build acceptance above today's value area high. If they do, they can look to lean on that massive 12-wide point of control as key support, while targeting Wednesday's session high. Ultimately, the bulls want to push through to the all-time highs to shift the weekly time frame back to up. Sellers have the exact inverse plan. They need to gain acceptance below today's value area low and utilize that same thick point of control as overhead resistance. If the bears can break through the daily balance low, it opens the door for a deeper flush toward the rollover gap fill. The Nasdaq presents a different structural picture because its daily balance high is the actual all-time high. Bulls can lean on the afternoon price probe to help find acceptance above value. While there are a few minor session highs sitting immediately overhead, they represent weak resistance, as the real battleground will take place at the true all-time high boundary. Sellers, on the other hand, need to force price acceptance below the value area low to start a rotation down toward the daily balance low. Breaking that key level exposes the weekly gap fill, followed by the rollover gap fill, and opens up a much longer journey down toward the weekly balance low. As a final guide for Monday morning, pay close attention to where the market opens. If the Nasdaq opens inside today's value area, be prepared for highly emotional, choppy price action. There are no clean structural references inside that zone, so your best bet is to sit on your hands, wait for clear market-generated information to develop, and trade the breakout of value. Enjoy the long weekend, rest up, and when the market reopens, leave your personal bias at the door. Let the market profile and the developing market-generated information guide your setups. Don't start with a bias. Let the data guide you. Remember, if you are going to buy an account with Tradeify, use code CB2724 and help us donate to St. Jude's Hospital 20% this time. Be safe and trade well.